There's a gold exchange just opening in St. Petersburg, and there is obviously the Shanghai Gold Exchange, which is very big, and those two are there to actually set the real price of gold, because it's the BRICS countries that now are determining what's going to happen in the gold market, and it's going to go away from the futures exchanges like COMEX, LBMA in London, etc. So we will see gold trading going more and more over to the BRICS countries. And remember that China is the #1 producer of gold in the world, and Russia is #2. And India is the biggest saver of gold in the world together with China. So that's where the gold trade is going. And so the US is not going to be that important in the future.
BRICS nations are laying the foundation for a new gold order. They're building physical trading and vaulting hubs in Singapore, Shanghai, Hong Kong, Saudi Arabia, Brazil, and across parts of Africa. These centers provide countries with direct access to gold markets outside the traditional choke points of London and New York. Instead of pricing dominated by paper derivatives, these hubs focus on physical supply and demand, where real ounces of metal change hands. Egon von Greyerz warns that the United States is steadily losing its dominance in gold pricing. For decades, futures exchanges such as COMEX and London's LBMA have set the tone for global trade. However, liquidity is now shifting toward Shanghai, which is quickly becoming a new center of gravity for physical gold. One insider summed it up bluntly: physical demand from BRICS is putting a floor under the market, something the paper exchanges can't push down. This stress is already showing in the numbers. Gold lease rates have surged to 9.4%. while silver leases are near 6.5%. Elevated rates like these point to a tight physical market, where holders are unwilling to part with their metal unless they're paid a premium. That reluctance signals absolute scarcity. Von Greyerz highlights the more profound shift. Exchanges in Shanghai and St. Petersburg, backed by the world's largest gold producers and savers, China, Russia, and India, are positioning themselves to set the real price of gold. If BRICS nations succeed in anchoring price discovery to physical trade, Western futures markets will lose much of their grip. What this means is that gold, the ultimate neutral reserve asset, is slipping out of Washington and London's control. And once BRICS sets the rules, the United States may find itself sidelined in the very market it once dominated. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
This is the time to get out of Dodge City. Now, and Dodge City is the US. Remember, gold is a global market. Tariffs in Switzerland or on Swiss gold into the US, it's a small part of the total. There's a gold exchange just opening in St. Petersburg, and there is obviously the Shanghai Gold Exchange, which is very big, and those two are there to actually set the real price of gold, because it's the BRICS countries that now are determining what's going to happen in the gold market, and it's going to go away from the futures exchanges like COMEX, LBMA in London, etc. So we will see gold trading going more and more over to the BRICS countries. And remember that China is the #1 producer of gold in the world, and Russia is #2. And India is the biggest saver of gold in the world together with China. So that's where the gold trade is going. So the US is not going to be that important in the future. But as I said, we are there to help people to preserve wealth. We've done that for 25 years. We entered it when gold was about $300 initially, and we intend to help people for many years to come. And everybody should now think about, if you don't hold gold today, own physical gold that you directly control and store it in a vault either in Switzerland or in Singapore, away from your home country, because if something happens, let's say in the US, at least you have your gold outside, and the authorities can't reach it, and you can flee to your gold if you want to. As I always say, protect yourself and then you enjoy life. Look after friends and family, and don't worry on a daily basis. There's so much to worry about today. But as long as you put your house in order and have your gold, you can sleep well at night. I expect that we are near major fall or potentially collapse of asset markets, that is stocks, bonds, property, etc.
Yeah.
It could have happened already 2008. It didn't. I think we're near again. You could never time this exactly, and it's no use timing it. Our investors, including ourselves, have been sitting on gold for 25 years as our primary investment. You sleep well at night. You know that governments are going to work for you every day to destroy the value of paper money, and therefore gold valued in paper money is going to go up for a very long time. Because nobody is going to start creating surpluses and ending the debt creation and the deficit.
Right.
So that's why it's such a wonderful thing. You rather than worry about your stocks every day. And remember, gold is the best performing asset class in this century by a big margin. And I exclude Bitcoin there, which is not a proper asset class in my view. And therefore, it's so wonderful. You hold gold, and you don't have to look at your price every day. You never look at price because the price of gold is irrelevant. You just know that over time, it's the only money that has ever survived in history, period.
Period.
And that makes it such a simple investment to hold for wealth preservation purposes.
Egon von Greyerz warns that the bigger picture is grim. Major asset markets, stocks, bonds, and real estate are all approaching another collapse. Governments are drowning in debt and deficits, and their only response has been to further debase their currencies. That ensures paper money will continue to lose value. Gold, on the other hand, tells a very different story. It has outperformed every traditional asset class so far this century, and unlike fiat currencies, it has remained a stable form of money throughout history. The real test comes during market turmoil. When equities crash, most portfolios have no place to hide. Gold has consistently been the exception. Look at the data. In the 10 worst months for the S&P 500 since 2015, gold outperformed stocks every single time. It often turned positive while equities were plunging. 5 out of those 10 months, gold posted gains. Even in the months when it fell, the declines were shallow compared to stocks. The contrast is most striking in extreme episodes. Take March 2020. At the height of the COVID-19 panic, the SPDR S&P 500 ETF, SPY, collapsed by 12.5%. Gold, it slipped just 0.2%. That pattern underscores gold's role as the ultimate haven. When confidence in paper assets evaporates, gold holds its ground, sometimes even surging as investors rush toward stability. Von Greyerz's point is clear. With governments locked into endless money printing and financial markets stretched to the breaking point, gold isn't just a hedge. It's the one asset with a proven record of protecting wealth through every crisis. Let's get back to the interview.
Well, Matt, as Emerson said, gold is for freedom and for benefit. The US is going the other way. These executive orders now, and the latest one that we're talking about today is on gold and tariffs on gold. 39% import duty into the US on 100 ounce and 1 kilo bars. This is the time to get out of Dodge City for the simple reason that the US is becoming lawless. You have now tariffs are a tax, and taxes are set by Congress. And here, every day, Trump is issuing a new executive order in contravention of the US Constitution. And these ones on gold now are again breaching the Constitution of the United States. So this is why I'm saying in such a lawless dictatorship, you should get out of Dodge City quickly because it's going to get worse. You will not just see tariffs coming and going, and this one might very well be changed tomorrow. There's some explanation coming apparently on this tariff, and it might be dropped or it might not be. But this capriciousness that we're seeing now by the president's office means that, as a holder of gold, I would not trust to hold my gold in the US with such lawless behavior. And that's why we say, get out of Dodge City. Don't hold your gold in the US. It's going to get worse. I am absolutely convinced with the pressures that the US has, both on the balance of payment on the deficit and debts, that there will be forced. First of all, there will be exchange control, and you will not be able to take money out of the US at some point. And I don't think that's too far away. So I wouldn't take that risk. And therefore, if you want to save some of your assets in a safe place outside of the US financial system, and I think the US financial system will be under massive pressure. Also, the banks are in a very, very dire state in the US. The government might very well decide that you must put a part of your banking assets, money or even other assets, into treasury bonds for a long period, which you cannot touch thereafter, because the US needs financing. So there are so many reasons why you should hold some of your assets, your wealth preservation assets, outside of Switzerland. Now, outside of the US. And where do you then hold them? Well, obviously, Switzerland is one of the oldest democracies in the world. It's 700 years old. And, there is rule of law in Switzerland. And there is direct democracy. You couldn't have a president in Switzerland who made these kind of decisions that we've seen now Trump make, because it's all about direct democracy, and the people has a say in everything in Switzerland. You can basically have a referendum about anything you want to contest or introduce as into the Swiss constitution and in the legal system. So therefore, it's a much safer place to be. Switzerland also, some Americans worry about war in Europe. It's not going to be a war in Europe. Russia is not going to go west at all. This war is all about Russia protecting its border. That's all it is. And against the NATO that's just getting closer and closer. So there will not be any boots on the ground in Western Europe at all. So there's no reason to worry about that. And as I said, Switzerland is not a NATO member, and is probably, if there was a war ever, then Switzerland is most likely going to stay outside again. So, and Switzerland is it's the biggest hub for storing, both producing gold. 70% of all gold bars are refined in Switzerland, and Switzerland has the most private vaults globally. Of course, we store gold in Switzerland, and one of the vaults is a mountain vault that is nuclear bomb proof, and so it's clearly the safest way to hold gold, and this is why our major customers are holding their gold there. We also still store gold in Singapore. It's also democracy. I think Switzerland is superior to Singapore from the point of view that Singapore, if there is a war in that part of the world, the US has a naval base in Singapore. So there's a risk that there'll be major troop movements there. And that's not the best place to store gold. But still, even in our view, we store gold there for clients who want to be there. But we prefer Switzerland as number one and Singapore as number two.
Egon von Greyerz makes a blunt point. Gold represents freedom and security, yet the United States is heading in the opposite direction. A new executive order has slapped a 39% tariff on gold bars entering the country. That's not free markets, that's control. And tariffs are taxes. The problem is that, under the U.S. Constitution, only Congress is authorized to levy taxes. Now we see presidential executive orders bypassing those limits, with the rules shifting overnight. That's why Egon warns it may be time to get out of Dodge City. You don't want your wealth trapped in a system that's becoming increasingly unpredictable and lawless. The risks extend further. Egon cautions that the U.S. could eventually impose capital controls, making it illegal to move money abroad. Banks themselves remain fragile, and in a severe crisis, the government could compel citizens to buy long-term treasury bonds to plug its deficits. Given America's staggering debts and fiscal pressures, none of these scenarios is far-fetched. The bigger message: gold still represents independence, but holding it inside a system that's eroding freedom defeats the purpose. If history is any guide, protecting wealth means holding it outside of political reach. Power is shifting in the world of finance, and the signals are becoming increasingly difficult to ignore. Trading hubs are being established, physical supply is tightening, and traditional centers of control no longer dictate the rules as they once did. At the same time, debt-soaked economies are straining under policies that weaken their currencies, leaving fewer safe places for capital to hide. Gold continues to emerge as the one anchor that holds steady through upheaval, but where and how it is priced could soon look very different. Could this transition mark the beginning of a financial order where physical reserves, rather than paper promises, determines the value of money? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.